if you sell a business, there's a lot of concessions for small businesses. So, for example, if you were over 55, had held a business for 15 years and sold the business for $6 million, there's concessions that say you could get that $6 million and not pay a cent in tax on it. But you've still got to get your structuring right. And so your business structuring not only affects your profitability, how much you take home, so profitability is one thing, but the tax effectiveness of how you're earning it is another one. And while you're setting up, and registration is obviously important when, in this industry, in this sector, but while you're doing that, you need to add the headache of getting this right. So you need to get this right to make sure that as you make profits during the life of the business, or even losses, there might be years when they're losses, that your business structure is set up correctly to be the most tax efficient as possible. It's hard to be specific in this area because everyone's circumstances are different. And so if you go out to dinner or go to the pub with someone, there's a lot of experts, and I should know, a lot of experts, pub experts, that say they know a lot about tax, but I'll be very wary to not listen to them. You need to go and see an accountant, a tax advisor, to get real advice, and advice that someone's going to be responsible for. So the structuring, so like a lot of the best structuring in Australia is about family income and distributing income in the family, and structuring can help with that, and it can help you be tax efficient to get the most out of the profits that you're delivering. The other thing with structuring is the top left, top left, as you guys are watching it, is this bit about you being risky. You're risky now. If you're running a business as a director of a business, something goes wrong with a business, you're the one who they're going to try to retrieve their dollars out of, right? So if something happens, and no, we're not saying you're going to be negligent as directors, but when things go bad in a business, it's the directors that the creditors come after. If someone's got a problem, they're going to go looking for the creditors. And so the business structuring is also known as asset protection. So when you're running a business, you want to make sure your assets aren't exposed to what happens in the business. Some things happen in a business which are unavoidable, and you don't want to let what happens in the business go through to and affect your personal affairs. And you don't want to have your home or your house or your investments under scrutiny from people who want to take them. So when you do set up your business, do it well. So there's things like trusts, family trusts, there's unit trusts, companies, right? So you're running your business out of a company, not out as an individual. And a lot of people, it's very hard in this sector because it's of the scale required. But I still get clients who are, it's too expensive to set up a company. It's one of those things, it's too expensive not to set up a company, because if you do something in your individual name as an ABN holder, individual ABN holder, sole trader, you're going to have a bad credit record and have issues with that for a long time, and it's not worth it.